Hello everyone, and things seem to be getting away from us a little bit here. I've been warning that stock markets were probably fully priced and there were developing downside risks. We also highlighted last week that the Australian dollar could be at risk. We did that in the media as well, and we're seeing the markets fall away quickly. I guess my message to you today, the number one way we can help you today, is to warn you that you do need to monitor these evolving risks in the market rather immediately. And I wouldn't sort of be taking the attitude that don't worry about it because it will come back like all the other corrections. Markets have short-term corrections and then they go to new highs, or they have medium-term corrections that can last 1-3 months or even 3 years. Certainly the price action itself is really highlighting that we may have reached a point in markets where there is that phenomenon, which I like to call exhaustion of the buyers. In other words, everyone who wanted to buy stocks has already done it. They don't realize it, but they've become a sea of potential sellers themselves, and there's not enough new buying coming into the market now to absorb even slight profit taking, which is why you're seeing sharp downside moves. Certainly fears of inflation, which I've been highlighting for some time. I said last week, expect a tsunami of inflation. It's going to be higher than people expect. It's going to be higher than central banks expect. And it's going to go on for longer, much longer than anyone expects, because you've heard me say it before, from the corner store to the global corporation, these business leaders have now realized they can raise prices. Whereas globalization created competitive downward pressure on prices, they now the lid's off the box, if you like, and they can raise prices as they wish to increase profit margins because they have the excuse of the pandemic. So that is happening everywhere. Everywhere you turn, you look, every aspect of your life, every day. That's why I've been saying, be careful, a tsunami of inflation is coming. It's going to be higher and longer than anyone expects. That is certainly the catalyst for stock markets turning lower over the last few days, but it's not necessarily the underlying true reason. I do believe the true reason is that the market got too far ahead of itself. The US economy is only almost back to where it was in 2019, but stock prices went 30% higher. In other words, pricing in 30% better profitability. In some ways, the inflation number means they will have that better profitability because they're increasing prices. But there's, the economy isn't 30% larger than it was, so stock prices were really stretching way ahead against the reality on Main Street. So if you like, there was the sentiment and euphoria of Wall Street stretching the elastic band away from the reality on Main Street, which is still around about 40% of jobs lost in the pandemic in the US are still lost. Now, we know that global equity markets are highly synchronized these days, and we're going to see this as a global phenomenon. We really are. In the inflation aspect of the supply chain disruption that's happening around the world, that inflation aspect will be present in all economies around the world. So I think we need to be very mindful that something quite significant and serious is perhaps happening right now, and to look at markets from that light. It may not be the cheeriest, happiest of news, but if we protect our wealth as well as create it, we're going to do a lot better in the long term. Thank you very much.